Welcome back to another video. Today we're talking about AMD stock, and over the last year, the price of AMD has got absolutely obliterated, going from $227 a share down to $98.75. And that was just today. It opened and dipped under $100. They also recently reported earnings on February 4th. So in this video, we are going to be going over some of the numbers in their earnings report, look at the valuation, look at the company, and just analyze AMD and how it looks as an investment. I do also personally have a position in AMD. I have 18 shares at $127 as an average price, and I'm currently down over 20% on the stock. So it is the worst stock that I own in my portfolio currently, but it's one that I own and it's one that I definitely pay attention to. If you're new here, my name is Sheldon. I've been investing for over 5 years now, and I make completely transparent videos talking about how I invest in the market. This is my portfolio. These are the stocks that I own. I am not claiming to be an expert or a guru. I'm just some guy that likes to share what I've learned along the way. And if you're interested in learning about the market and staying updated on stocks, then subscribe to the channel and let's go on this crazy journey of investing together. So let's dive right into it, and I want to give a quick snapshot of where AMD is trading at. So on a year basis, obviously it's down a lot. It's down 42%, but from its highs, it's down over 50%. So it's been a pretty bad year if you've been buying AMD stock, but if we look at a 5-year chart, it's actually up 111%. So on a 5-year basis, AMD doesn't actually look like that bad of a investment, right? I think on average, it takes like 7 to 9 years to double your money in the stock market. And if you would have bought AMD stock 5 years ago, then you would have doubled your money already. So, the second you take a step back, it doesn't actually look that bad. I mean, like on a year chart, to be fair, it's pretty bad. But 5-year investment is still up 112%. Stock's currently trading at $100. The market cap is $162 billion. Revenue of trailing 12 month is $25 billion. The price to earnings ratio is 100, which is pretty much the first point that I want to make as to why AMD has been crashing for the last year. Because you can say that is pretty expensive of a PE ratio, right? And like we'll look at forward PE in a second, but PE ratio, this is what it's currently trading at. It's trading at 100. So obviously 100 times 1 of earnings per share is going to give you the stock price. And if we compare that with a company like Nvidia, right? Their PE ratio is 41. So you can already see that AMD is a lot more expensive in terms of price to earnings than a company like Nvidia. And if you compare growth rates, if you compare AMD's growth rates with Nvidia's growth rates, you probably know what that story is going to be. But we also, if we look at iShares Semiconductor ETF, SOXX, the average price to earnings in this ETF is 30. So again, you can see that AMD is currently looking at a bit of an expensive buy, right? If you're looking at just price to earnings. But the forward price to earnings on AMD is coming down, and let's dive into that. Or actually, first, I wanted to look at, just to show you that this is a good benchmark to compare with AMD. If we look at the holdings of SOX, like it's all of the big semiconductor stocks, right? Broadcom, Nvidia, Qualcomm, Texas Instruments, AMD. AMD is only 6% weight in the ETF, but just for research purposes, Intel's in there. This is a good thing to benchmark against any type of semiconductor stock that you're looking up, even if it's AMD, Intel, whatever. So to briefly touch on forward PE, forward PE is basically it's the forecast that analysts are expecting, and for AMD specifically, the reason that it's so low is because they're expecting an increase in earnings per share. And I believe like on this website, we can see that they're expecting, 467 earnings per share in the upcoming year. So, I mean, we'll see where it comes in at in their next earnings report, where their earnings per share is going to come in at, and see if it's on track to be a high full year number, like almost $5. But that's, I kind of think that a 21 forward PE ratio on AMD is a little bit of wishful thinking, if I'm being honest. Like, they're currently trading at $1 EPS, right? And so if we want to go from $1 to $5, a lot is going to have to change in the business model. And we'll dive into the numbers and we'll dive into what actually has to change in order for that to happen. But basically, if we want to go to a 21 PE ratio, currently, either the stock price needs to drop to $21, which that's not going to happen, obviously, or earnings per share is going to have to go to 5. So, or roughly around 5. And I think like it could maybe go to 21, but I'm guessing like my honest opinion is that it's going to come in at a little bit higher than that in the coming quarters as they continue to release their earnings. Another thing with AMD, and a reason as to why the stock price has been going down, if we look at their profit margin, there's no easy way to say this either, is it sucks. Like, obviously, it's positive, like it is 6%, and the gross margin's not bad, but the main problem that AMD is having, or one of the main problems that the AMD is having, is going from their gross margin to their profit margin, right? Like, they're going from a 53% gross margin and then only getting 6% profit out of that. And if we look at a company like NVIDIA, which is obviously NVIDIA has had, let's look at them on 1 year. They're up 54% on a 1 year and up 1,800% on a 5 year. And if we compare AMD with their profit margin, this is ridiculous, guys. I'm not going to lie. This is like really crazy to have a 74%, 75% gross margin, and then their profit margin is a 55% profit margin. Okay, that's actually ridiculous on a $3 trillion company. And obviously they're in the same sector, right? Like AMD and NVIDIA are in the same sector. So you can start to see why a few of these things lead to the stock price not being so good for AMD. And like they operate in such in a sector like the semiconductor sector, the AI and data center sector. There's such big expectations for growth numbers on these companies. And if we look at AMD's quarterly revenue growth, for example, we can see that from Q3 of 2023, they had 4%, 10%, 2%, 8%, 17, 24. And like you could argue like that's not that bad, right? And they're growing, and that is an argument that I would make because their stock price has been falling the whole time that the fundamentals of the company have been getting better. But when we look at a competitor like NVIDIA, and this is also ridiculous, but when we look at their quarterly earnings and their quarterly revenue growth numbers, this is insane, guys. Like, let's be honest. From Q3 2024, they had 205% revenue growth, 265, 262, 122, 93, 77. So obviously, NVIDIA has been the winner in the industry, and I think it's kind of a combination of all of these things that have led AMD's stock price to go down. Obviously, there could be other factors at play, and if there's anything else that you guys know about or any reasons that you think AMD has been going down, please let me know, because through my research, this is some of the stuff that I have found. But obviously, I could miss some things, and you guys could have some interesting perspectives that I haven't thought of. So please let me know if you think there's any other reason for the dip in AMD stock in the last year, because I'm sure it's kind of a combination of, you know, so many different factors, and these are just the ones that I've mentioned are just a few of them. So all that being said, why do I think AMD is still currently a good investment, and why have I bought into the stock? So I've mentioned this in a few recent videos, but the amount of investment that's going into AI and data centers currently is just, it's crazy. It is very important to understand how big of an impact that this can have throughout all these industries, and it's absolutely ridiculous, right? So Amazon, and I'm going to talk about some of the big Mag 7 companies here, but Amazon plans to spend $100 billion this year to capture a once-in-a-lifetime opportunity in AI. So Amazon's coming out with a $100 billion investment. That's ridiculous, and that's going to go to a lot of AI and data centers. You know, it's kind of unclear how much of this investment AMD is actually going to capture, so that's a little bit hard to speculate on, but if it's going towards that sector, it's going towards the sector that AMD plays in, I think it's safe to say that they might be able to capture at least a portion of this $100 billion, and that goes the same for all of the other big CapEx investments from the other big tech companies, right? Microsoft, for example. Microsoft came out $80 billion to build out AI-enabled data centers. So Amazon 100 billion, Microsoft 80 billion, Google 75 billion on AI data center buildouts. The 2025 CapEx surge is happening with all these big companies. Meta, this is like a new news that pretty much just came out, and I haven't really dug too deep into the story, but I think there's speculation that Meta might make a $200 billion AI and data center campus or something, but it is reported that it's like pure speculation. And in terms of Meta CapEx, they came out and said that it's going to be just 60 to 65 billion on capital expenditures. So you can expect 60 to 65 billion from Meta, and then maybe with the chance of it being a lot more than that. It's probably not going to be any less than that if we're being completely honest, right? So the opportunity to take advantage of all of this investment, it's a historical amount of money that's flowing into a single technology here, right? Like it's crazy when you zoom out and think about it. But AMD is positioned perfectly, just like NVIDIA, just like Intel, even though obviously Intel has some problems at that company, which maybe we'll look into. But AMD, they're positioned perfectly to take advantage of it, and we'll look in it. We'll look into it. And the setup for AMD right now, the setup is one thing that I think is very important to understand, because all of the big professional investors, what do they say? They say, buy when there's fear in a stock. Buy when the stock's going down. Get in when everybody is getting out. And right now, the setup for AMD is it's looking good, because on a year basis, right, the stock has been going down for a year straight. And if we look at the financials of the last year, we've had quarterly revenue growth for a year straight. So the fundamentals have continued to grow. The financials, the underlying revenue growth has continued to go up. That doesn't mean there's other inefficiencies and other problems within their financials, but top line revenue has gone up while the stock price has gone down. That leads to a very good looking setup in the market. Especially, obviously, you have to have a long-term mindset. You're not going to get in and the market AMD is going to shoot up in the next week, right? Like, that's not going to happen. You have to give the business time to implement new strategies and really work towards becoming more profitable in terms of AMD, reducing expenses and turning the business around. That takes a lot of time, guys. You have to understand that. That's why you have to be buying into the stock AMD right now if you're buying into it, but you have to be thinking about it on a long-term basis, 3 to 5 years plus. So now let's take a look at their recent earnings reports. And the main thing that I want to highlight here is their different revenue segments. So they have their data center segment, their client segment, gaming, and embedded. And really, the bet that you're making with AMD is in their data center segment, right? And obviously, I have a check mark here because there was revenue growth. There was growth in their data center and client segment, but gaming and embedded have gone, it's not looking good for gaming and embedded, though they just released new GPUs, which we'll look at today, actually. So their data center segment, the data center segment is comprised of a few chips, right? And if we look here, leadership performance and TCO across cloud, enterprise, and AI workloads. So it's their AMD EPYC chip and their AMD Instinct chip. So let's look at their Instinct chip just to get a general idea of what they are, guys. It's important to understand what you're investing in, right? Okay. If you don't understand it, do your research. Like, don't just blindly throw money into stocks. That's not how you're going to actually turn around and make money in the market. Try as hard as you can to do your research, do your due diligence, and actually try to understand what these companies do. So the AMD Instinct chip, the MI300 series, these are accelerators. So they're meant for generative AI and high-performance computing. I do believe they're releasing another one that's targeted for this year. But this is basically this is the bet you're making on their Instinct accelerators, because this is what AMD's generative AI play is. If you're building out a generative AI data center, and if you're looking at AMD products, this is what you're going to be buying from AMD. And it's all for high performance applications. And then on top of this, they have this thing called ROCm, I believe. And I think, ROCm software. And so they kind of have this integrated solution for generative AI, which includes programming models, tools, compilers, libraries, runtimes, and basically it provides this full solution for creating a generative AI model. Right, and all these case studies come in, and all of these machine learning and language models, and this is what has been created from the Instinct chips and from their ROCm software. So it's just, this is the bet that you're making in terms of AMD. And if we look at their revenue growth of the data center revenue, that's total revenue, gross margin. Where is it here? Sorry. Yeah, so their data center net revenue is up 69% year over year. That's a pretty good number. I'm happy with that number. Client segments up up to 58% year over year. That's really good. Gaming is down 59%, which is a little surprising, to be honest, but obviously that's not a good number. Down 59% is brutal, actually. Like that's very, very bad. And embedded, which is comprised of lots of different little hardware solutions from AMD. But gaming, obviously gaming is like a big community thing for AMD. Like your graphics card in the gaming community is like what everybody talks about, right? And AMD came out today, February 28th, and they released a new AMD Radeon RX graphics card, the 9000 series. Now, I haven't looked too far into this, nor am I actually like that big of a gamer. I do like to play video games, but I'm not like super into building my own PC and parting out my own hardware for my PC or whatever. But I'll definitely look at the community reaction from this release, and I'm sure there's going to be lots of benchmarking to come out, especially against NVIDIA chips coming soon. And I believe that this is a way cheaper. I'm not sure if they have the price here, but I did see that it was like $599 or something. So if they can come out and release a GPU that is competitive with somebody like NVIDIA, and NVIDIA GPUs are a little bit more expensive than $599, I believe, at least like the higher end models of their GPUs. So it'll be interesting to see how this plays out, and then how it reflects into the gaming segment of their financials. So if we go back to here, let's hope that next quarter, with the release of the new GPU, they're not down 59%, and maybe they can get back to some even, like, let's start by not being down 59%, I guess, and then maybe we can focus on getting to some small revenue growth numbers in that segment. But at the end of the day, if you're buying AMD stock, the data center segment is where the exponential gains and a lot of that growth that you're looking for is going to come from. And to dive a little further into specifically their data center segments, strong growth in public cloud deployments with 1,000+ Epic instances existing in 2024. Microsoft, Google, AWS, Tencent, Alibaba all launched 100+ AMD general purpose and AI instances in Q4 of 2024. So every time, obviously, that you see names like Microsoft, Google, AMD, Tencent, all of these big data center, massive clients for AMD, right? Anytime you see those names in their earnings report, that's a very good thing to keep in mind. And if we look at the outlook for Q1 2025, they're guiding for $7.1 billion plus minus $300 million. And I believe Q4 of 2024, they reported like 7.6. So they're not like, in terms of like quarter over quarter, not like just quarter growth from one quarter to the next, not like Q1 2025 versus Q1 2024. They're actually guiding to have a lower revenue this upcoming quarter, and maybe because it's like not like the Christmas quarter, the holiday December season, and companies are really planning on how to spend that CapEx this quarter, and then maybe next quarter they're deploying a lot of that capital. I'm not sure. Or maybe they're just kind of sandbagging it, and hopefully that they come in and really crush that number. But they're also guiding for a 54% gross margin, $2.1 billion operating expense. So yeah, we'll see what happens when they report their next earnings, and it's going to be interesting. I'm excited to see how the gaming segment specifically reacts from new graphics cards. And then obviously I hope that they really crush revenue growth in their data center and AI segment, because that's where my main bet is. Basically, the reason I'm buying AMD stock is because obviously NVIDIA is the leader in the industry, but as long as AMD comes in and grabs a little bit more market share and enough to grow their revenues consistently over the next 5 years, and enough to grow their data centers, and enough to have their chips and their Instinct and their EPYC servers inside those data centers of a lot of these big, large cloud providers, that's going to be enough to raise the stock price. And if it goes back to 200 in the next 5 years, I'm a happy investor, right? Like, you can't complain about doubling your money in a 5-year term. So, it'll be interesting to see how it all plays out, at least today. Anyway, we're up 1.15% or 1.14% today, even though, I mean, on a 1-year chart, oh my God, that is horrendous. That's not good. So, and I know a lot of you guys out there have probably bought AMD stocks in your portfolio in the last year, because it's growing as a, it's people are starting to pay attention to it because it's looking like a good setup. And I'm not saying it couldn't go down further. And I'm seriously thinking about deploying a little bit more capital into AMD and maybe getting up to like 30 shares maybe, and lower my average cost a little bit. And then, sit there, and that's where I'll be comfortable with my position. But that's pretty much everything that I wanted to talk about in today's video. If you guys have any other opinions or perspectives on AMD stock, let me know in the comments below. I would be interested to hear what you guys think about the stock, or if you agree or disagree with anything that I said. As always, I wish you the best of luck on your investment journey. Peace.